Hi, this is Kim Watson. Welcome to the big picture for week commencing the 14th of October. So let's just run through the summary of things here first. We're looking at my analysis. I say summary of things. We're looking straight through in terms of the detail here for now. US dollar then, keeping an eye on the Fed watch because it's towards the end of November 31st. I believe that the meeting is being held on. It's popping and dropping a little bit. It's not particularly moving significantly, but if we don't get a cut in October, it certainly looks like there's going to be a cut in December, but with a little d, that is. But it certainly looks like a potential cut. Now that cut should be pretty much priced into the markets whatever happens. However, it then goes down to the value of can you get more for your money somewhere else. Speakers, just looking at this week, we've got speakers all week coming out, so just be wary of volatility. Keep an eye on Forex Factory or whatever calendar you're using just to see who and when they're speaking and what they're speaking about. Some of them are just very lightweight meetings, etc. Others are much more significant. More significant this week really is that core retail sales. We really want to see what the consumers are doing. It's a consumer driven economy, so we want to see what they're doing. We've got the Philly Fed Manufacturing Index and industrial production. Both these numbers are more in focus. Normally I would have just completely ignored them. They wouldn't have even been on my list, but as we're looking at growth and we're looking at manufacturing and the slowdown in this sort of side of the economy, they become more and more important, and at this stage they're very important. Overall, the dollar, what's it been doing? It's got choppy, and if you looked at all the way down my list here, it pretty much summarises it with the New Zealand dollar being a bit on the edge there, and the S&P's pushing up, but in real terms there's a choppiness. There's this switch on most of these, putting in on the dailies, high lows, higher highs, or lower lows, lower highs. So there's an overall switch seems to be in play at the moment, which has probably made it a bit more choppier over the last week or so, for the reason why it's been a bit more choppier. But that's where we are in the bigger picture there. Eurozone expected. Well, we're still waiting to see if anything else changes, but there's nothing coming up near term. We've got the German economic sentiment data out on the 15th, that's tomorrow, and then the German Buber president speaking on the 16th. He can be Weizmann can be a very influential player, so watch out for that on the 16th in terms of what's said and suggested at that point. Moving on then, cable, the pound rather, not cable at all, just the pound. Okay, we're still getting, well, will the exchange be down? It's really expected that rates are going to be pretty low for a long time. It may be up, may be down, no one's really sure, but one thing is for sure is the sentiment. The sentiment's changing, as it has with the euro above there. It's some of the slight increase on the longer positions, reduction in the UK on the pound of the short positions that the asset managers have been holding, and reduction with the hedge funds as well. So straight across there, more positive feel there. What we got this week? Tomorrow we got Bank of England Governor Carney testifying on the 15th there. We've got employment data coming out, and then we've got inflation on Wednesday and retail sales on Thursday. So again, key data. All these numbers seem to have a bit more significance at the moment. Not necessarily moving the market massively, but maybe given the drift of the market. Yen, no real significant news there, but again, well, short positions being reduced here. A slight reduction in the hedge positions on the long side there. Okay, all chop. Aussie dollar. Okay, we've got this situation at the moment. Reduction of the short positions there, and a slight increase by the asset managers, but this is more significant, this for me anyway. So this slight reduction, and it really shows, as I say, technically at the moment, that this may be this sort of more positive move, even for the Canadian dollar. There maybe no, that's been reducing, but on a lot of these currencies may be seen as an early start of something more significant. For now, could all change very quickly, but for now. So what we got for the Aussie, we've got monetary policy minutes tomorrow early morning, and then employment report on the 17th. So two key series of figures coming through there. For the loonie, the Canadian dollar, we are basically a slight reduction of asset managers' money, and slight increase on the hedge side, so it's pretty neutral there really overall. But important figures this week: on Wednesday the inflation data, and Thursday manufacturing sales. Again, choppy old market. New Zealand dollar, well, we're still waiting for the next meeting of the central bank here, but for now we're still getting more and more. I mean, it's a slight reduction by asset managers, but an increase in the short positions by the hedge managers. Overall, we're still a very bearish and extreme play. We just get more and more extreme each week at this stage on the New Zealand dollar. Now we had seen a bit of a pickup, but this week, or last week, it just couldn't really materialise. So I've left it on that downward trend at the moment against the US dollar. S&Ps, money coming out of the S&Ps here again, that almost directly proportionate to what's going into the 10-year bonds, the T-bills. So that's pretty as would be expected, I guess. Slight reduction in the short positions held by the hedge funds there. Maybe just unrolling some of them where they are because they're being squeezed a bit. But overall, the markets there still look quite positive on the S&Ps, but I'll talk about that in a minute. And the Chinese talks are continuing, and the first phase may be even close to some sort of agreement. Might be. Okay, so that's where we are. Picture-wise, in terms of quite an interesting thing. When I looked back over the change over the last 3 months, would you believe it? The pound is against is the strongest against the US dollar than anything else. It's the strongest one of the lot, which is surprising, but that just shows you how bad it's been over the last 3 months. But it's had quite a bounce back, keeping it still in full position. The strongest currency still in real terms is US dollar, but there, as I say, there is that drift, and this could be sliding at some point. The yen, we've seen money running into risk on this, but as risk comes off and traders go for safety, it's been going there, and as soon as that safety's off, the yen's been pushing back up again. So there we are in the summary there. Technically then, let's just have a look here. I just got for some reason I've left the old let's get rid of that. That's better. Get rid of the S&Ps for a minute and just run through in order. Actually, let's look at the dollar index first, just so you can see what's going on here. I've got a monthly picture. Let's just change this to a weekly for now. You can see the trend really is still up there. Maybe there's sort of some weakening at these highs here, and it looks like it's trying to roll. It's put like a bearish pivot swing. A break of the lows of last week would sort of trigger that and suggest further downside. No need to go any further with the dollar index because it's almost an inverted, well, it is an inverted euro. And there's the bullish pivot swing, the inverted position. So for the euro, looking ahead at this week, maybe if we've seen the weekly pivot being hit, and that's ticked that box. Are we going to push through this 50? Reasonable opportunity, I believe. It's put the higher low in, and this is why I've said we've seen this for a lot of currencies. We've seen it push up, pull back, higher lows, so we could see a bit more continuation. In all extent, suppose you'd look at this and just say, well, actually that's still in a downward trend on the dailies, and that's why I put it as a crisscross as opposed to an absolute. It needs to really break above these prior highs here to confirm something a little bit more. It isn't a downward trend at the moment, on the verge of it. It's on the maybe on the verge of breaking it, and we'll see it in the coming days or maybe weeks. But does look like it's marginally stronger. Now, I've got no time for the euro rather at all in real terms. I think it's a fundamentally flawed currency, and what they're trying to do is not really working. However, the dollar's just having a bit of a breather in real terms, so the other currencies and the currency, even the weakest, gets a benefit, and it hasn't got the best benefit, I should add. As I say, the pound has actually benefited the most. So moving on very smoothly to the pound, and you see last week solid up day when there was a potential up week with a potential of some sort of agreement last suggested by the Irish Prime Minister on the border issues. Still a long way to go, and whether this will actually hold, it still hasn't got up to that weekly 50 yet. But we'll see how it goes. Again, it's come back, tested its weekly pivot, had a reasonable bounce off that so far, maybe more to go. You can see on this daily chart it's run into its daily 200 and had that sort of reaction from it last week, but we've sort of crossed over here, got a bit more positive, and well, as I said, broken those prior highs there. It's confirmed a higher low in, and it's sort of looking like it's got more potential there. Quite a difference from where it was 3 months ago, even early August down here. So it's making quite a reasonable move at the moment, and it's probably one of my favourite upside in some respects. However, in the current situation, we've got to be just mercenary, and if there's anything bad, just sell it. Right, dollar yen. Big bullish engulfing almost. It's not quite. It's come up a bit short, but sort of ended up quite sort of like this further upside here on the weeklies. The potential to push off if we get this sort of risk back on, and traders are willing to risk their money, we could see this yen pushing up further. It hasn't really managed to do it properly on the weeklies yet. Still struggling, hence a bit downward trend there on a weekly basis. But you can see on this daily point of view, again, it's trying to push up and break the prior highs there, which just done that. Maybe we'll push up towards that daily 200 and beyond as we go through this week. Aussie dollar. Aussie really is quite weak. It has put a bullish pivot swing in on the dailies there. Not massively convinced at the moment. But again, if this Chinese situation is resolved to some extent, we could see the knock-on across a lot of these currencies, particularly commodity currencies. If it means that there's potential for increased demand again from China, we'll see, but that could be quite a lag. But for now, it has put the higher low in on this time frame. Again, still downward trend. It's easily arguable, but it's on that verge of switching. Canadian dollar. I just really struggle with this in terms of it's just chop right the way through on the weeklies and the dailies, and we spend half a month in a very, very tight range, a little push up, and then we spend another week, nearly most of the week apart from one day with a bit of news, just tightly bound there. Has pulled back, caught the weekly pivot. Well, this is a real test to see if it's got any legs, whether it can reverse round from this weekly pivot and push southwards, but at the moment it's not looking great. Now, when you compare this to what the pound and the euro is doing, well, it's a bit becoming a bit of a laggard. New Zealand dollar. Would like to have seen something more come of this again. Well, it's probably not quite even managed a bullish pivot swing there, but the similarish lows a couple of weeks ago. Last week we ended up positive. It just couldn't really do too much. Even it gave back a bit on Friday, and it's given back, and it's not really. May have been put at a higher low in, but where it's closed, it's not particularly positive. Still, as I said, in a lot of these currencies, technically still arguably in a downward trend. We need to see a bit more break, but if it could break above that daily 50, maybe I'll be a bit more bullish on this. And as I said, with that extreme situation with the cotton analysis, I do wonder at some point these big boys will start switching, and we'll see a move more of a move to the upside. Bit of a correction, even if for the short term. Okay, we've done dollar. Let's look at the S&Ps. So the S&Ps weekly wise, well, still higher lows at least, and look at solid, but an inside bar last week even, and it's put a high low confirmed in there in this movement. Very bitty. Chinese agreement would be positive, at least in the short term. I wonder how long for, but would be positive, and we could see the S&Ps pushing back up there. Could be that, I mean, there's such an expectation, it's already built into this market, and we could just see it just sort of roll over, and money goes elsewhere. But for now, it's still more of a bullish bias, although at some stage I do expect it to roll. In fact, it's almost done a Gartley pattern, and it's done this ABC correction on this market here, and it may be that it could roll a bit sooner rather than later. But as I keep on saying, the money's got to go somewhere, and okay, the 10-year bonds is seeing quite a bit of money going into them. They are sort of pushing up, but people want yields, and they're more pure safety. People want some return, and they're not going to get those there, so they may be looking back and just keeping an eye on equities as the alternative. So that's pretty much it for the week. I've done the covers, I've done that. Goodness gracious, there you go. I will just have a quick look of gold, because gold was mentioned quite a lot recently, so in our rooms at different times, and you've got this sort of ball flag sort of sitting there, although it's got, when you come down to the dailies, you see a lower high in there, and it's choppy and not really doing too much. If we go into proper recession, it's more likely to see some further upside, but if a Chinese decision or agreements made, etc., like this might just carry on its little roll over here. It looks a bit soft. The other currencies are starting to push up there. Maybe it's time for gold just to pull back a little bit. So that's it. I'm going to end it there. Hope you have a great week. I will be back next week, but of course catch up on more detailed daily information on my daily outlooks or morning outlooks. Okay, bye for now.